Hello and welcome to Wednesday Moves, where we learn trading step by step without hype and without shortcuts. Let me ask you something honestly. Why do most traders lose money even after learning strategies? The answer is simple. They ignore risk management. Today, you will understand how professional traders protect their capital. This lesson is more important than strategies because without risk management, even the best strategy will fail. With strong risk management, even average strategies can succeed. What is risk management? Risk management means protecting your capital. It is the skill of controlling how much you can lose. Professional traders focus more on managing risk than chasing profits. Why risk management matters? Trading is not about winning every day, it is about surviving long enough to stay in the game. Survival always comes before profits. The number one rule in trading is simple: protect your capital at all cost. If you protect your capital, you always have another chance. What is a stop loss? A stop loss is a tool that automatically closes your trade at a loss which you accept in advance. It protects you from emotional decisions. Every professional trader uses stop loss. Why every trade needs a stop loss? Because without it, losses can grow out of control. With a stop loss, every loss is a small and controlled. Small losses are part of successful trading. Every trade has a risk and a potential reward. Professionals risk small amounts to aim for larger rewards. This allows them to grow even if they lose some trades. Position size and risk. Your lot size controls your risk. Bigger lot size means bigger risk. Smart traders adjust their position size based on their account size. Here are some common beginner mistakes: over leveraging trades, trading without stop loss, using large lot sizes with small accounts. These mistakes destroy accounts quickly. Why consistency beats big wins is because one big win feels good, but consistent, small discipline builds the real growth. Most professionals focus on consistency, not excitement. A simple rule for beginners: never risk too much on one trade. Think long term. Your goal is not to get rich quickly, your goal is to survive and improve. Professionals think in probabilities. They accept losses calmly. They follow process and not emotions. Here are some key takeaways. Strategies come and go, but discipline stays forever. Protecting capital is the foundation of every successful trader. If you are serious about learning trading, focus on building strong foundations first. This course will continue step by step, helping you understand trading clearly. Subscribe if you want to continue learning. Thank you for watching.